Back with the market right here in ET now in the thick of earnings still. So let's analyze another set. We have the management of IRFC joining in on the show right now. Amitabh Banerjee, the CMD, on the show with us. Amitabh, hi, good morning. Good to have you on the show. It's actually overall been a good quarter despite the second wave. Help us understand what clicked for you in the quarter gone by and how realistic were the implications of the second wave on the business for you?
Well, thank you for having me in your show. Thank you. Yeah, in fact, we have been having a sustained growth over the last about 5 years, 5 to 6 years. And despite the second wave, the infrastructure development in Indian Railways has not really has not been dented. And that is borne out by the fact that in the last financial year, which was totally, beset with COVID, we had made a total disbursement of about 1,05,000 crore, and therefore the pace of infrastructure development in Indian Railways has always been there, and that has resulted in the kind of disbursements that we have been making to Indian Railways over a period of time. And even in the first quarter, as is borne out by the statistics, the turnover has grown by 24.87%. Quarter on quarter as compared to 3,669 crores in the corresponding quarter of the last year. We have logged a revenue of 4,581 crores in this quarter with a 24.87% growth, resulting in a growth in net profit by 68% from 891 crores to 1,501 crores. The net worth has also gone up from 31,000 crores to 37,000 crores. The asset under management has taken a huge leap from 2,73,500 crores in June 2020 to 3,66,155 crores to end of June 2021. The total borrowings that we have taken has also grown from 2,34,000 to 3,28,000 crore. The net interest margin has gone up from 1.43% to 1.66%. Earning per share has taken a leap from 3.38 to end of March 2021 to 4.6 on an annualized basis to end of June 2020. The book value per share has also increased from 27.48 to 28.63. See, the profit turnover ratio has taken a leap from 28% to 33%. Return on net worth has taken a leap from 13% to 15.78%. So all the financial parameters have really registered a very robust performance. And we hope that this will be a sustainable performance over a period of time, keeping in view the National Rail Plan of 2030, which has about 11 to 12 trillion rupees of investment in the pipeline, which will make the Indian Railways infrastructure ready for 2050. So we feel that IRFC will be financing a major portion of the capex requirement of Indian Railways over a period of time, say in the next decade or so.
Sure. The capex outlay for Indian Railway, Amitabh, has gone up. Brief us about the recent forays into railway projects and how much are you financing now?
You see, during the last year, we have financed about 68% of the total capex outlay of Indian Railways. That is out of about 1,51,000 crores. We have financed about 1,05,000 crores. This year, we have been given a target of 65,258 crores to begin with. In the last year also, we were given an initial target of 58,000 crore, which later on was enhanced to 1,05,000 crore. This year, we have been given an initial target of 65,258 crore. And we hope that in course of time, the figure might increase. So the proportion of capex of Indian Railways that has been financed by Indian Railway Finance Corporation, that is IRFC, has been registering a huge upsurge over the last 5 to 6 years, and that has resulted in the robust performance of IRFC.
Okay, Mr. Banerjee, Alex coming in on this one, and you mentioned that you overshot the target last year, and this is despite challenging circumstances. Would you say that things have normalized now, and given that you want to beat those targets. Can we have an idea as to what the outlay could be in FY22 overall?
You see, that's a very difficult call to take, because last year there was some, there was some budgetary constraint in view of the, dent in the revenue of Government of India, and therefore the budgetary support towards the financing of capex requirements of Indian Railways was that much, constrained. So we actually filled in the gap by contributing to what we call as the EBR portion, that is the extra budgetary resources portion. Similarly, in this year, of course, there has been the gross budgetary support for financing the capex requirements of Indian Railways is on a higher side as compared to last year. As the economy has also, registered a good figure as far as the revenue generation is concerned. Despite that, we feel that if and at the same time, the infrastructure development of Indian Railways in various fields like track doubling, tripling, quadrupling, as well as the signal and telecom upgradation and station development projects and railway electrification. That has taken. That has been enhanced quite a bit. The speed of these projects have been enhanced quite a bit, and in view of that, if the capex requirements increases over a period of time, definitely that will definitely have an impact, a positive impact on the kind of disbursements that will make to Indian Railways in FY 2022. So it will be a very difficult call to take as of now, that what would be the magic figure at the end of the year. But we hope that going by the past trends, the final outlay would definitely be more than what has been initially mandated as per the budget of Indian Railways.
Mr. Banerjee, assuming that we don't have any major disruptions like we had over the last 12 to 14 months, the kind of spending that the government is envisaging on infrastructure and the thrust therein, could you look past this current financial year and give us a sense of how you think the AUM is expected to grow on a CAGR basis over the next, say, 4 to 5 years, if we can look at?
Oh yes, as I said earlier, there is a national infrastructure pipeline of about $111 trillion over a period of 111 trillion rupees over a period of say up to 2030, and out of that, National Rail Plan itself, is envisaged to contribute about 11 to 12 trillion rupees, and over a period of time, we have been financing. Right since inception of IRFC, we have been financing almost, more than 35% of the total capex requirement of Indian Railways. And as the years have progressed, the proportion of funding by Indian Railway Finance Corporation has been growing by leaps and bounds, as is borne out by the fact that last year we contributed about, about 60%, more than 60%. So therefore, going ahead in the next 4 to 5 years, the asset under management would be taking a leap forward, and now it is to end of Q1 we are having a asset under management of about 3.66 lakh crore, which can go up to 5 to 6 lakh crore in say 3 to 4 years time, and that will not be surprising. And going by the pace that Indian Railways has taken in the development of infrastructure, which has been also borne out by what the Honorable Finance Minister has also declared in the last budget. There is a thrust by Indian government on infrastructure creation, and Indian Railways is definitely at the forefront as far as the creation of infrastructure by Government of India is concerned. And therefore, the challenges that IRFC would be facing by way of mobilizing funds for financing the capex requirements of Indian Railways would that much be more than what it is now in the years to come.
Absolutely. Mr. Banerjee, a pleasure speaking with you. Thank you so much and wish you all the best for the coming years. On that note, we're completely out of time on this edition of The Market. Thank you so much for tuning in. From Aisha, Mubina and myself, thank you so much. Do stay tuned, lots more coming up over the course of this day.